Hi, this is Jack from Alpha Charts with a state of the market video. Today is August 21st, 2021. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Okay. So let's get started. Also, before we get started, if you like these videos, please like and subscribe to my YouTube channel. It does help me, and I really do appreciate that. So thank you very much. All right, so here we go. Starting with the SPX. And so SPX is almost back to all-time highs. We are literally, what, 1% or so? Just under 1% from all-time highs. That is bullish. And you see moving averages are still aligned bullishly. There is a divergence here, and I think we're going to highlight divergences throughout many of my charts today because we're seeing it all over the place, and I think that's something to look out for. But as of right now, everything looks fine. Now, if price rolls over here and we get the cross, that would be something that would make me a little more cautious. Where, we almost had it here, you got it here, and then it recovered almost immediately here. That was back in March. So the cross itself does not mean that, the whole world is falling apart, right? But it does mean that, that maybe the trend is less certain, right? The upward trend, the velocity of the upward trend, that's what we're talking about. So that's the SPX, right? Again, still bullish, but it's got some issues, and we're going to talk about the issues. Let's do RSP. So RSP is actually the more interesting of the two. So we have the breakout, which made me very bullish, right over here. I was real bullish 2 weeks ago. And then it's kind of rolled over and retested the breakout. Now, I haven't even looked at this. Okay, so here's RSP. And as it's trying to make new highs, what do we got there? Again, a big time divergence here in the momentum. So it retested, and a beautiful day on Friday, right? Nice green day. But now we have downward sloping 9 and 23 day moving averages. With the divergence, again, I think as long as 152 holds, it's bullish, right? I think 152 is the line in the sand. I think that's let's see, 152-ish, somewhere around. That's fine. We'll just do that. As long as this little line right here, this blue line kind of holds, price closes above it, which it has so far, I think that's nothing to be bearish about. If price rolls over and closes below 152, and this becomes a false breakout and on the equal weighted S&P, I think that's a bigger concern. Again, do I think we're looking at 50% decline? Yeah, no idea. It could be 5%, could be 10%. It may just come back down to test this area right here. That would be my expectation. So let's see what that is. From here, that would be 5%, right? 5%. So that would be a normal correction. Now, if you're in growth stocks, it's going to feel like 15 or 20%, but depending on what you're in. But that'd be a 5% correction. That'd be very, very normal. This would be obviously the 145-ish level is the bigger level to be aware of, and that'd be more trouble. But that's RSP. So SPX, divergence, RSP, divergence, maybe roll over, but it's holding on by a thread, but holding on still. QQQ, looking at, again, divergence, right? As it's making, as this is making new highs, we're seeing this divergence go on there again. And divergences can be, they can be taken care of through time, right? This can move sideways, and this divergence then will be rectified, or through price, right? So it could be either or. Again, just looking at where could it go? there's your 5% to here, and really, 7, 8, even a 10% correction, which again would feel crazy, would feel terrible, would hurt your account. Because if you're in growth names like I am, more than even the 10% probably would show. But in the end, it would be within a market structure to pull back 10% and reset charts and create the next big bull run. So it's not that, I'm wanting it, but that would be absolutely fine to retest this breakout somehow. And that'd be a 10% correction, and it would feel like the world is ending, and then you maybe have a easier push forward at that point. We'll see. I don't know. QQQE. This is the equal weight Qs. Again, there's your divergence that we're seeing literally everywhere. Boom, as this is going higher here. Yeah. This is going higher right there. Right there's your divergence. It's at 54 momentum, not very good. Looks like it wants to roll over. Again, to retest the breakout would be, only 3-4% away. Not very. And then you could get the people talking about head and shoulder tops, right? That's always fun. All right, that's QQQE, IWM. Held on by a thread, right? So small caps, weakest of the bunch, already in a downtrend, and I think that listen, 209's got a hold here. If 209 rolls over before the rest of the market does, watch out, right? I mean, small caps are already, there's pressure on the downtrend. I mean, now let's talk about the other side of things, right? We have a positive momentum divergence showing up here. Again, it's small, right? So it hit the same or relatively the same spot, but didn't quite get as deep. It's small, and I don't put much stock in this, to be honest with you. I don't, because I like this, it's got to get, prices got to get above moving averages before I can get excited about anything, right? I want to see these moving averages in a upward sloping fashion, right? Bullishly aligned, upward sloping. As of right now, this is bearishly aligned, downward sloping, and there is a chance that 208 gets taken out. If 208 gets taken out, again, that would be a potential leading indicator for the broader market too, if it does it before the rest of the market does. So definitely be aware of that. Looking at IWO, which is the Russell 2000 growth ETF, looks just like the Russell 2000, to be honest. So there's not much information here. No divergence at all in here. It did hold where it had to, but again, it was extended from the moving averages. So this doesn't shock me, but it is tested 1, 2, 3, 4. This is the 5th test of this area. And every time it gets tested, it's more likely to break. I don't know if it can hold a 6th test or not. It's tested a bunch of times already. So we will see. But again, this is definitely on the bearish side of things. XLF tried to break out here. It could not. Doesn't make it, a disaster. But I mean, again, there's your divergence, right? Couldn't get to oversold. I'm sorry, overbought. Couldn't get to overbought. That's a problem. That's a false breakout. Could we see financials drop to the bottom of this range? That's very possible. I mean, we almost have the cross here. Again, false breakout. Ugh, not so good. Look at SMH. SMH, as things are going higher, right? You have, right, as things are going higher, you have this divergence. We couldn't get to oversold, not even close to oversold, really. And you have a potential false breakout here to contend with. You have a bearish cross right here between my moving averages. Now it's kind of retesting them from the downside. SMH rolling over is a problem. Back last week, this was a normal retest. This now is a little bit more than that, in my opinion. So that's a problem, I think. lumber as an indicator, right? As an indicator, peaked in May as SPX continued higher. Well, what has lumber done? SPX is higher. This is now the divergence now is pretty significant, and it's rolling over again. And again, maybe it's testing again. If lumber breaks down below 83, I think the market's in big trouble, which is very possible. And then you can say maybe this is a topping pattern, right? Kind of head and shoulders top or whatever. But as an indicator, I'm more concerned about what happens when this breaks down. And it says forward looking, things aren't looking so good. And again, this is forward looking 6 months. We're coming into, August, September, October, that areas. And we'll see if it holds true or not. But that's wood, lumber. Again, the decline was there, right? And so looking up 10 months, we're coming up into that, I'm sorry, not 10 months, 5, 6, 7 months, somewhere around there. We'll see if it foretells what may be coming. Looking at bonds. So bonds, again, I'm just going to kind of zap away some of these real fast. So here's the bonds. And I think bonds is really important right now. And, so far, the trend has been higher since June, right? So maybe this rolls over. I think, below 1.52, 1.51 or lower, everything's fine. No big deal, right? Above 1.52 or higher, I think that this then becomes a bottom, right? And we may see widening of bond ratios, and that's usually a negative for the market. Again, we're looking for things that look like this or even like this to get much more defensive, right? We're not seeing it quite yet. Maybe it's, I don't know, but we're not seeing this, right? We're not seeing this yet, at least. This was 2014, we started rising. Then there's 15 and, going to 16. Then the big spikes up. That's what we're trying to avoid. As of right now, though, not there. I think the line in the sand is about 1.51, 1.52. Below 1.52, everything's good. Above 1.52, and we're going to see widening of credit spreads and maybe potential problems. The VIX, VIX is still tame under 20, and 24 and a half. Things get kind of wild. In my book, it's tough to tell with VIX what the exact level to worry about is. These are just areas I've made. As of right now, though, it's tame. There's nothing else to say about that. And the Vixen, which I don't even have levels on here, but I look more like trends. Again, tame, just like the VIX. No big spikes or anything like that. Good. The call ratio, it's in no man's land, right? So no signal one way or the other. So that's the 1 foot in the door, 1 foot out of the door. Maybe you could call this complacency, potentially. But as of right now, nothing, no signal, if nothing else. Value line geometric index, again, a measure of breadth, looking at lower highs and lower lows. We started seeing the divergence as this was going higher here. Here was a divergence here, right? And now it's going in the same direction. Okay. Again, it's a breadth indicator. And so what are we seeing? So maybe, I hate when I do that. Maybe that's a positive divergence, right? We'll see. It may, again, divergences, not all divergences matter. So we don't know if that's the case. If this does try to retest a breakout, 8%, that's very realistic. Very, very realistic. So we'll see if this divergence is positive, and maybe listen, this could still go lower with divergence still holding true as this moves higher. And that would be actually very bullish, right? If we hit this 8% and this is, up here, that would be a very bullish divergence at that point. Right now, I don't think this is, all I can go by is lower highs, and so far lower lows. Maybe this is a higher low, we'll find out. But so breadth is still an issue. Again, we're going to look at MMFI. This is also another indicator. Oh, look, my log scale's off. You're welcome, Bailey. As you can see, lower highs, lower lows, breadth is in the 35.86. And so that's a negative, obviously, again, but not extreme. And so that's really the problem here. There's more room to go to the bottom if it decides, it doesn't have to get down there. It didn't get back in September, right? Didn't get back down there. It stopped right there. It's 24, 25-ish area. So we'll see if this, what happens here. But I like when it gets down to really, really low, like back here in March. This was a great sign of a bottom. So would love to see it get really, really low here. We'll see. But again, as markets are moving higher, again, if we compare it to SPX, pain, just get rid of this for now. Again, we have the SPX that's zooming higher, yet under the surface, less and less stocks are above their 50-day moving average. Again, that's the divergence that is making me very nervous. Now, again, divergences are not a timing mechanism. So we don't know, like, listen, there was a divergence right here. Market kept going, grinding higher. So is this divergence more significant here? Well, the longer it goes on, I think the more significant it is. And again, price or time, those are the two options. So we'll have to see what happens. Again, maybe this is a higher low right here. Maybe it rolls over. We're watching it, but divergences are there and they're everywhere. Just looking at gold, just real fast, get rid of this. Here's gold. Again, not really giving a signal, still lower highs and maybe a higher low, we'll see. But looks like it wants to roll back over. People are not rushing into gold at this point, right? But I'll tell you what they are rushing into, and they're rushing into Bitcoin, right? So Bitcoin, there's your Bitcoin right there. And it's just been absolutely on a tear. Pretty amazing, really. Is it sustainable? Who knows, right? It's Bitcoin. But as an indicator, that's a risk appetite indicator, I would think, because it is, obviously very volatile. The question is this your new gold indicator, right? And I don't know the answer to that. So if people are rushing into Bitcoin, is it because they are looking for a safety or something that's not correlated as far as the markets go, or alternative asset, we'll call it? And that's a possibility too, right? Now it's coming back into some of this supply right here. So obviously I would think Bitcoin maybe runs into some supply issues up here. Maybe not. I'm not a trader of Bitcoin or crypto. I'm a holder of crypto, just started recently. But yeah, Bitcoin as an indicator. So the question is really, is this going to be a risk on indicator because it's such a risky thing, or is it because it's not correlated to the markets at all? Is this a more alternative to gold, a safe haven, and maybe a better indicator than gold? That remains to be seen. So I'm going to keep looking at it to kind of maybe help figure out the answer to that question. If you know the answer, leave me a comment below. But full circle wagon back to the beginning, and the cues, divergences are everywhere. So let's get that there. And so I think that it's time to be careful, not a timing mechanism, but as long as price can't get above, again, 370, I think Q of 370 is an issue, right? Again, this was the area that we kind of identified, and it's been literally going sideways as momentum is diverging. Let's just real quick, Amazon already, is in a gigantic downtrend, right? Like this is like terrible, since end of July, since earnings. Now let's look at Apple, it's trying to hang out, right? It's trying to hang, and it's doing fine so far, just moving sideways. If Apple rolls over, that's a problem. If Google rolls over, which it hasn't yet, right? That'd be a problem. If Facebook rolls over, that's a problem. If Microsoft rolls over, that's a huge problem. That's a beautiful day though, right? Look at that. Yeah, that's doesn't look like it wants to roll over at all. But as of right now, it's only Amazon that's rolling over, and so the market is still stable. If they start to go after some of the other big boys, that ones I just mentioned, I think that would be a big problem with breadth being so bad in the market. I think the big guys are still holding the market up. Now, I would love to see the small caps and small caps not break down here, and IWO not break down here, and SMH, recover here. But as of right now, we're not seeing that. So caution for sure is warranted. Not full board bearishness. I still have long positions, and I have a short position on through SQQQ. And so for the most part, I'm neutral, because that's what the market's telling me. I don't think this is a time to push on the accelerator. I think this is a time to be cautious. All right. Good luck out there this week. Again, please like and subscribe to my channel. I really do appreciate it. And tomorrow I'll be doing the stocks to watch video. Look out for that. Again, pulling what's holding up the best in this market, is because those are the ones that are going to give us the best opportunity. Okay. Take care and have a great day.